We have been silently watching the biggest players jumping in on tokenization while majority of the world is just asleep at the wheel. They don't even care to look into half of this. I speak with a lot of people on a day-to-day basis outside of crypto, and the things that I tell them and the reaction that they have proves everything to me. And what I mean by that is that it proves to me that almost no one is paying attention to what's happening. Nobody is following the big money. And almost no one is aware of the biggest revolution happening right in front of them. Tokenization is not just one big hype word. It's what's happening right now. We go back to just April, where Larry Fink told us that tokenization of the market from stocks to bonds to real estate is coming. If we could solve one problem. Now that's just digital ID that BlackRock wants to push, which we already know why they want to push that. But I think that tokenization of everything happens even without digital ID. But the fact that we have big players like BlackRock telling us this and prepping the markets is already telling us what's coming, right? We know what's coming. Tokenization of everything of value is going to happen. But what's interesting about this, right, is that BlackRock has been actively accelerating this, even going back to January of this year. Larry Fink was again urging the SEC to rapidly approve tokenization of bond stocks. And we already know that BlackRock was one of the first players to really start tokenizing in large sums, I should say. And what's crazy is even today, we still have big players like Robinhood CEO also warning lack of U.S. regulation stifles security tokenization efforts. He was also joining Larry Fink in calling for clear regulations for tokenized securities in the U.S. Again, the urging of the SEC to get behind tokenization in a big way is very, very loud from these prominent CEOs. And then, of course, enter Ripple, right? So back in the beginning of April, Ripple did put out a post talking about what's happening with tokenization and the shift coming. Now, the big thing to really kind of look at is what Ripple was predicting in terms of the dollar amount, but also what they were saying within this article, which I'll talk about here in a second. But they were saying that by 2033, 0.6 trillion could easily shift into 18.9 trillion. Before it was like about $16 trillion. But this continues to change, and we continue to see more and more predictions really kind of highlighting just how fast things are going to change over the coming years. But we look at why, right? Regulation and institutional adoption is driving a lot of this. Real world assets like bonds and real estate are also growing in a big way. But then you also have faster interoperable financial infrastructure, which is a huge game changer, right? Obviously making things more efficient and changing the way that money is moving and making, very prominent processes that are very inefficient using paper-based processes, for an example, making those digital and speeding up everything. It's just one big accelerant. So as we look at this, right, we still wonder what's holding all of this back. Well, we're going to get to that here in a second. Over here, we also have a price prediction around RWA market. This is from STM. They're predicting 30 trillion by 2030. Again, like all of these price predictions are all over the place. This was their base case. Their bull case was 50 trillion by 2030. But again, we don't get there without regulations. Even within this article from Ripple, right? They do mention the key growth enablers, regulatory clarity in markets like the EU, UAE, Switzerland, largely established, and also expected soon in the US. Outside of that, you just have mature tech infrastructure, including wallets and custody platforms. They're pretty much speaking for themselves, right? Because Ripple has been around this space forever. They have wallets and custody platforms already tapped in. And then strategic investments by banks and fintech M&A. Again, this is very interesting because Ripple already has investments from banks like Standard Chartered, for an example. They were one of the first investors into Ripple as well. But these are the things that the second we solve them, tokenization quickly scales. Now, outside of that, recently we just saw SEC Commissioner Hester Peirce say tokenization cannot reach its full potential without legal clarity.
Tokenization cannot reach its full potential without legal clarity. Issuers and transfer agents continue to be unsure about whether a crypto network can be the master security holder file or a component thereof for purposes of the Exchange Act's transfer agents rules, and even where state law has expressly provided or contemplated the use of a crypto network in connection with the maintenance of securities ownership records. Further, the Commission's Special Purpose Broker-Dealer Statement, which defines crypto asset security to encompass any security, tokenization.
Now, on top of this, right, we know that on May 8th, the SEC considered new rules easing security token issuance. This was mainly on securities, right? So when we're looking at what the SEC is trying to do here, they're trying to get behind this. They're trying to push clear rules, and they're trying to provide that clarity for tokenization initiatives so that these big players can tap in a big way, because they also are aware of how significant tokenization will be as we start to move towards a much more digital based system, but also the significance of the US being behind this in a big way, because the US must get behind this if they want to become a tech leader around crypto. Now, outside of this, we also saw Paul Atkins talking about his priority is to develop rational regulatory framework for crypto, emphasizing the need for clear guidance in the space as well. Check it out.
A key priority of my chairmanship will be to develop a rational regulatory framework for crypto asset markets that establishes clear rules of the road for issuance, custody, and trading of crypto assets, while continuing to discourage bad actors from violating the law. Clear rules of the road are necessary for investor protection against fraud, not the least to help them identify scams that do not comport with the law.
So we're moving towards a much more regulated space. It's only a matter of time, and we have here an SEC Gov Paul Atkins keynote speech at today's tokenization roundtable. He laid out 3 policy focus areas the agency is targeting: to create clearer guidelines for crypto issuance and explore new registration exemptions and safe harbors, provide consumers with expanded custody options, including self-custody and potential updates to the qualified custodian definition, and then explore integrated trading platforms and the modernization of ATS regulations to better accommodate crypto assets. But again, when we think about what's really going on here, all of the moves that the SEC is making currently and will continue to make is going to focus on a few things. Obviously, DeFi and just regulations around crypto itself, but tokenization is going to be at the forefront of this alongside stablecoins. Stablecoins probably initially are going to be, the big focus, but outside of that, tokenization is like number one. And the reason why I say that is because of all of the CEOs like Larry Fink and Vlad Tenev that have, pushed and urged for the SEC to get behind tokenization already, because they understand how big this actually is. But at the same exact time, what's crazy is that we know that more recently, the DTCC had their patent completely exposed. This was, a patent that was involved around tokenizing quadrillions in global assets. And we highlighted this, right? HBAR was involved, XRP was involved, and a few other ones, obviously. But, when we think about a lot of these networks around the tokenized market, okay, we're at 22.61 billion. The networks themselves have about 12.07 billion tied to them. The second that we get to the trillions of dollars around the tokenization market, that's when it's already too late. Right now, we are still technically extremely early because we're only at about $12 billion. And to a lot of people, that might seem like a lot, but it's not when you look at the total addressable market. Now, we know that public blockchains are going to be, the main drivers around this. I'll talk about why in a second. But we look at the most prominent names here, Stellar, right? We could argue Ethereum, sure, if you want, but, we already know that Ethereum at scale is just not fit. So we immediately look at Stellar, number 1, Algorand, number 2. And, there's some great projects here as well, but I'm mainly looking at the big utility giants outside of tokenization as well. So we look at immediately XRP. So there's 3. XDC number 4, right? And then we think about HBAR. HBAR is not here. HBAR is not getting tracked currently. But these are some great projects that I personally see, a lot of value behind. And by the way, tokenization continues to grow on some of these networks. Like for an example, XDC is up big. It just recently added, Comtech Gold, I believe, CGO. Yeah, so Comtech Gold got at it. That's $11.6 million of just tokenized gold on XDC. And again, some of these networks you probably don't even know about, like even Algorand, right? A lot of people actually don't know that $450 million is tied back to Algorand. And even if we go back to like the beginning of the year, there was technically over $800 million tied to Algorand. Yet most people are just not aware of this. And by the way, this is actually through Securitize, which is one of the biggest names out there in terms of the protocols. But then we go to what Aberdeen recently put out back in the beginning of 2024. So we're going back a whole year and like 5 months or so. Why we need to move to public blockchains. Now, the significance of this is coming from a firm that has tokenized on Hedera, has tokenized even on the XRP ledger. Like if we go back to that network list, for an example, and we go to the XRP ledger, we could see that Archix is one of the names here, but they're actually tokenizing the Aberdeen Liquidity Fund, the Lux Fund, on the XRP ledger, as well as the Euro Fund. There's the US Dollar Fund and the Euro Fund. There's over $55 million tied to this. In fact, actually $56 million. So Aberdeen is very experienced around the public blockchain space. And we even have down here that public blockchain continues to promise greater financial democratization. Liquidity is less private markets and reduced cost. To date, the vast majority of institutional tokenization initiatives have used permissioned blockchains. In the second of a short series of digital asset focused articles, the senior investment manager at Aberdeen highlights the need to embrace public blockchains. It's certainly possible for traditional financial institutions to innovate, but the level of disruption is unlikely to reach that of public blockchain companies. So again, public blockchains are the main driver here. You need to have public blockchains tapped in. If you really want to tokenize and you really want to, achieve what you want in terms of the efficiencies, in terms of realizing in the actual value around this tech, you need to tap into public blockchains. It's no longer about private blockchains. And the fact that Aberdeen is already tapped in with Hedera and even the XRP ledger, those are 2 big ones that we're really kind of looking at. Outside of that, we obviously look at Stellar. We look at Algorand. We look at these additional networks that are now starting to see a lot of money tied to them in tokenized form, and they're growing. Even XDC, right at 26.5 million, love to see it, number 13 spot. They have 500 million coming to that network over the next 90 days through Leaky, which again, I'm very focused on because 526 million would immediately jump it into the number 3 spot. ZK Era or ZK Sync Era is a layer 2. So technically XDC will be number 2 from the layer 1 side of the space in terms of tokenized value on it, which is wild. Yet XDC is barely even talked about. This is why as we start to see tokenization becoming a much bigger focus from the TradFi side, and we start to see rules being made around tokenization to really open up this market, we are going to see a lot of these public networks that have massive amounts of money tokenized on them become very prominent names in the space. And I do think that they are going to surge in value as well because of retail finding out about what's actually happening. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.